So, coming up next will be presented by Alex Bentley from Chorus One. Some information about Chorus One. It is one of the most prominent enablers that helps securely increase crypto holdings by participating in decentralized network across more than 30 different chains. Alex will share with us about MEV, one of the most important concepts to DeFi and POS-based blockchain. What is it, and why should you care about it, especially against the context of the merge? So now, please join your hands together to welcome Alex.
So this thing will click the... Okay. Thank you. Thank you for that introduction as well. So, hi everyone. My name's Alex. I work in business development and ventures at Chorus One. As you've already alluded to, we are a validator business. We operate across 30 plus chains. We're a team of around 40 people right now, which is mostly researchers and engineers. And we recently announced a venture fund, which we're really excited about to support some of the interesting projects that we're particularly excited about, and we're going to be active in that over the next 3 years. So if anybody's building anything interesting here, by all means, give me a shout after this presentation. So the bulk of this presentation will be focused around MEV on Solana and Cosmos. They are relatively immature compared to Ethereum. We can talk about that a little bit more, but those two networks have been around since the inception and participated in test nets and really helped get them to where they are today. So let me dive in. All right, so get my bearings right. There's sort of 4 main areas I'm going to tackle today on this presentation. That is, what is MEV, MEV on Solana, MEV on Cosmos networks, and most importantly, why you should care. Okay. So what is MEV? So MEV is defined as maximum extractable value, and it refers to the maximum value that can be extracted from block production in excess of the standard block reward and gas fees by censoring and or changing the order of transactions in a block. So you might hear MEV being referred to as minor extractable value, which did make sense in the context of proof of work with Bitcoin. Now with proof of stake, it's probably more accurate to refer to it as maximum extractable value. So essentially, the definition is expanded now. Validators generate revenue traditionally from staking and gas fees, but MEV provides another potential income stream for validators over and above this. And this opportunity exists for 2 main reasons. Validators have access to privileged data, being 1, and 2, validators can influence the ordering and or censorship of transactions. So how does MEV work? So I'm just going to run through a very typical example. Well, first of all, kind of overall picture of what MEV looks like. So in a typical transaction, the transaction is broadcasted, and before the transaction is included in a block, it goes to a mempool, and between the transaction being submitted and it going to the block, as it sits as a pending transaction here, there is an opportunity that exists. Whoever has access to that mempool, which includes validators and other actors, can monitor it and find opportunities to generate profits. So here's one example. This is what we call a sandwich attack. An interesting name. So it's a typical example of MEV. It's called a sandwich attack because the actor exploiting the MEV opportunity submits a transaction before and after the user's transaction, sandwiching the user's transaction effectively. So here, Alice is the user. And Alice submits a transaction to buy 1 Sol at $100 with 1% slippage. Now, the key point here is the high slippage tolerance of 1%. What Alice is really telling the validator, or whoever has access to this mempool, she's saying that, yes, I'll buy 1 Sol for $100, but I'm willing to pay 101. And that's a really important piece of information. She's kind of putting all her cards on the table there. And that 1% gap provides an opportunity for somebody who has access for that information. So in this case, the validator notices the transaction with the high slippage tolerance in the mempool and submits 2 transactions. The validator buys 1 Sol for $100 before Alice's transaction and sells 1 Sol for 101 after Alice's transaction to Alice. So Alice's transaction is included in the block, but instead of paying $100, she pays the 101, which she was very openly willing to pay at the start. So essentially, because there's a difference between the amount that Alice has agreed to pay, which is 100, and the amount she is willing to pay, that opportunity is there. The extent to which Alice's transaction, the validator's transaction, affect the price of Sol really depends on the depth of the pool itself and the size of the transaction. But essentially, where it's a relatively shallow pool with a relatively large transaction, the profit potential here is quite large. So another example is arbitrage. Okay, so Bob submits a transaction to sell 1 million Solana, to a Radium USDC and Solana pool. Now, in this case, Bob's transaction represents a large percentage of the liquidity pool, and the increased Solana supply into that pool reduces the price of Solana in this pool. So that presents an opportunity for the validator who notices this arbitrage opportunity and inserts a single transaction containing 2 swaps immediately after Bob's. So the validator is going to buy 1 million Sol on Radium for $100, which is the price Bob was selling it for, and then immediately sell 1 million of Solana on Orca, which is another decentralized exchange, for $101 million. Bob's transaction is included in the block, followed by the validator's transaction. And at the bottom here, we can see that the validator generates 1 million profit by virtue of having access to privileged data and transaction ordering authority. So just a quick definition of what arbitrage MEV actually is then. So it's any transaction that includes more than 1 on-chain swaps, where the input asset is the same as the output asset, and the output amount is greater than the input amount after transaction fees. Arbitrage here is a necessary component of efficient markets, and I'm going to talk a little bit about why that is on the next slide, actually. So, is MEV bad? The answer is yes and no. So we just talked about arbitrage, and arbitrage is often referred to as benign MEV and could even be considered health medicine for AMMs. The reason for that is, if we look at the last example, when Bob submitted that large transaction, holders of Solana in that Radium pool would have seen their asset value fall relative to other DEXs. So because the validator had access to this information and could essentially capitalize on it, in doing so, they rebalanced the value of Solana across the two pools and achieved market parity. So, you know, it's in that particular example, there are typically no ethical kind of considerations there, and it's actually quite healthy for the ecosystem as a whole. But there are other forms of MEV, such as time bandit attacks, and there are examples of situations where validators are incentivized to rewrite blockchain history and create consensus instability, which is not good. And I'm not really going to go into the technical details around what that is, but it's one example of bad MEV, and there are numerous others. So, in any event, I think the key question is, what are the MEV extractors doing with the MEV, right? So in the examples we just saw, let's look at the sandwich attack, for example, where the validator generated $1 of profit. The big question really is, what is the extractor doing with that profit? You know, if they're putting it in their back pocket, then that might be questionable, but they might be redistributing to the community, they might be investing in social impact projects. So the point is, Alice was willing to pay $101 in that situation. If the validator extracts that $1 surplus and puts it into something good, then it's questionable as to whether or not it's actually a bad thing. So we've kind of gone through MEV, what it is, whether it's good or bad. Let's talk about the kind of nuances on these specific networks and what the actual ecosystems look like from an MEV perspective. So MEV on Solana. So Solana is a young blockchain with a comparatively immature MEV ecosystem versus Ethereum. So like Ethereum, and in contrast to Cosmos app chains, which we'll talk about a little bit later, Solana is a multi-purpose blockchain which allows for diverse applications. And that really kind of gives rise to a complex ecosystem and more complex opportunities for MEV transactions. The key point being, unlike Cosmos, Solana hosts a variety of different dApps, and that kind of inherently implies complexity. So some of the unique features of Solana, there's no public mempool, so only validators have access to this, and that reduces MEV opportunities. There are low gas fees and no fee markets, which increases MEV opportunities. It's not very costly to try and participate in some of these MEV extraction exercises. There are very short block times, which require sophisticated latency optimization. Essentially, there's not a whole lot of time to mess around. You have to submit a transaction very fast, and to do that, you need to have sophisticated technology, and that reduces MEV opportunities. Not many people can do that. So Chorus One is at the cutting edge of this research. So we have published extensively around the topic of MEV on Solana. We've got a comprehensive June dashboard, leading research on the state of Solana and MEV and mitigation of negative externalities, and we have a dedicated in-house MEV team on this topic. So this is just, so I'm going to run through quickly some of the research findings that we've come across. This is a typical example of a weekly arbitrage profits breakdown over a 7-day period, obviously. So over the past 7 days, $34,000 approximately has been generated on the Solana ecosystem from arbitrage. Now, it's important to bear in mind that we're in a bit of a market slump at this current time, and this could be anywhere between 5 to 10 times bigger during any kind of bullish period. So it's there's a market for it. Another key point is that the actual opportunities here and the profits that we're talking about are concentrated in the hands of a small select few. So there are very few sophisticated winners who capitalize on this opportunity in Solana. So if we can have a look at some of these stats here, most opportunities where the kind of winner takes it all really, 197 addresses competed, the top 5 addresses extracted 60% of the arbitrage MEV. And this is just a graph that kind of breaks down how it's split amongst the various bots, and we can see that the top 4 to 5 are clearly dominating the opportunities here. And this third bullet point here is really just why these barriers to entry exist, and that is capital, speed, and knowledge of exotic opportunities / black swan events. So you need a lot of capital to really generate any meaningful profits on Solana, and we'll talk a little bit about why that is on the next slide, but essentially you need to do very high volumes because the actual profit per transaction is actually quite small. Speed we've already spoken about. You need to have very sophisticated systems in place to be able to make these transactions quickly. And you need to have knowledge of really what's going on in the ecosystem. You need to have probably a dedicated research team to have the finger on the pulse the entire time to make sure that you can capitalize on any black swan events. There we go. Okay, so this is the anatomy of a transaction. So the key point here is we can see there's a very small median arbitrage profit. This is per transaction. And so this is really a volume game, okay? For anybody to make any meaningful profits, yes, a large number of transactions needs to be made. And so that's the key point. This is where the capital barrier to entry really exists on Solana. Just a side point here on the network side of things, we can see this $156, which is the value accrual to Solana in the form of fees from all of this MEV activity. Because Solana has relatively low gas fees, all this MEV doesn't really accrue a whole lot of value back to the token. But however, it does create efficient exchange markets because, because of the low gas fees, people are more willing to participate in these activities. And in the example of arbitrage before, we saw that, markets were balanced out very quickly. So the future of MEV on Solana, obviously this is blockchain technology, things move very fast, and Solana is no different. So a gas fee auction is still missing, but this is going to change. Currently, MEV searchers have to spam transactions to the leader in an attempt to what we call win the battle. And we estimate that only 3% of attempted arbitrages are successful, which represents $33 million of kind of unnecessary blockchain traffic. But there are some changes coming. So 4 major upgrades. UDP to quick. Essentially, this means that any sort of failed transaction won't halt the entire blockchain, but it'll go to a separate stream. Stake-weighted QoS, which is basically prioritizing transactions during heavy traffic according to how much stake you actually have in Solana. And this will probably improve the kind of quality of experience because people who have a long-term interest in Solana, who hold a lot of tokens, will receive preferential treatment, and we can expect that to improve the kind of user experience. Fee markets, yes, some spamming bots that currently exist will be forced to shut down. It will no longer be profitable, and block builders may launch soon, alleviating spam as the dominant execution strategy. Key point being, a lot of these kind of upgrades will change the way in which MEV kind of impacts the experience of using Solana as a chain, but it's not going to eradicate MEV itself. MEV will still be there. The whole point of this presentation is to show that there's a lot of MEV activity on Solana, and there is a real appetite to participate in this kind of activity. Now, these changes or these updates will affect the way users experience the chain itself, but MEV will still be there. And it's arguable that because the user experience on Solana will improve, the actual MEV activity will increase as more people flood into the network itself. So let's move on to MEV on Cosmos. If the clicker will work, there we go, MEV on Cosmos. All right, so the state of MEV on Cosmos. So Cosmos, if you're not already familiar, is a universe of interconnected blockchains. These chains are tailor-made to suit single applications optimally. So unlike Solana and Ethereum, which is a kind of general purpose blockchain, each kind of dApp has its own blockchain on Cosmos. And this focus really reduces complexity. MEV opportunities are much easier to anticipate than on general purpose chains such as Ethereum or Solana. And Osmosis is a typical example or a great example of a single purpose chain, and it's the dominant exchange in the Cosmos. So some unique features of Osmosis. There are low gas fees and no fee markets, which increases MEV opportunities because people can easily participate. And there are moderate block time of 6 seconds, which allows for computation of up to 8 hop arbitrages, which again increases opportunities because you don't need to be as sophisticated. There's more time to assess the situation and act accordingly. So again, Chorus One, we're at the cutting edge of this research. Chorus One, we are one of the leading ecosystem participants in Cosmos. We launched the first public resource on MEV extraction on Osmosis, which is a Twitter bot. And we have an in-house searching and research partnerships with other leading teams in the space. So this is an area of real focus for us right now and has been for some time. Okay, so one of the unique aspects of Osmosis is that daily profits vary quite a lot. Okay, so it's really a function of market volatility. If there are any kind of crazy events in Cosmos or Osmosis, the MEV profits will track that quite closely. And that's because, we'll talk about this a little bit more, but the barriers to entry to participate in MEV on Osmosis are a lot lower than Solana. And so any kind of market action or market condition fluctuation will result in a lot of people trying to participate in some of these MEV opportunities, and it will be more volatile than you might expect on something like Solana, where only a smaller proportion of people can capitalize on these black swan events. So profits are a near linear function of market volatility. And tail events like the lunar crash can be covered by standard arbitrage bots. There's no crazy sophisticated technology to do this kind of MEV on osmosis. And here there's just an image of this is one of our Twitter bots, or this is our Twitter bot which covers MEV on Cosmos. And we can see there's a big difference here in these dates. So this is September the 10th and September the 18th. And 9,000 USD has been extracted in the last 24 hours on the 10th versus just 378 on the 18th. And that was really due to a market condition or an announcement made by Cosmos, which really affected the Atom token valuation. And we can see that there was a huge jump up during that period in MEV extraction. So again, with Cosmos, a few winners dominate in terms of MEV extraction, but it's to a much lesser extent than on Solana, and that's due to these fewer barriers to entry. So we can see here that the top 3 searches account for 30% of profits, which is much less than on Solana, which we saw earlier, where it was around 60%. So again, the reason why this is there is more time to compute multi-hop arbitrages. Currently, very few searchers can execute greater than or equal to 6. Capital is generally not a bottleneck in this ecosystem. Leading searchers have an inventory of less than 20K, and a top searcher can expect to earn 800K annually. And here we just have some images of a variety of kind of wallets or kind of more diverse active participants than we can expect on Solana. So osmosis allows for superior price discovery. This is quite an interesting point. So it's much easier to take advantage of opportunities on osmosis versus other dexes on Solana, for instance, because the liquidity pools on osmosis tend to have, or the majority of them tend to have, Osmo on one side, which is due to, obviously protocol incentives. But what this means is that all the kind of assets are in one place. All the pools have the same token on one side, and this effectively allows a lot of people to quite easily and efficiently participate in MEV without having to jump around various exchanges, without having to do various hops between different tokens. Just quite an easy interface. And because of that, we can expect, as the title suggests, superior price discovery. With more people participating in these kind of arbitrage opportunities, we can expect the token prices at any given time to better reflect the true underlying market value of those tokens. So I think the key point here is this is kind of very, I guess, bullish, and a bullish sentiment around Osmo. As the leading DEX on Cosmos, if Cosmos obviously does well, which we expect it to, then osmosis will naturally do well. But also as the kind of primary token to take advantage of some of these arbitrage opportunities, you can expect some interesting price action around osmosis as and when the market permits. So the future of MEV on osmosis. Still very early days in osmosis and Cosmos in general, but the next 12 months we'll see the emergence of flashbots like block building services, where essentially there will be kind of cross-chain mempools which will allow people to extract MEV, and these will ultimately leverage the interconnectivity of IBC to generate synthetic cross-chain mempools, allowing for highly complex and profitable strategies. And the people who stand to benefit most from that are validators, especially validators who are multi-chain across kind of Cosmos networks like Chorus One, because as people are able to access this mempool and bid on some transactions, this will influence gas fees, and validators will benefit from that without a doubt. And there is something here called threshold encryption, which is a very technical topic, but essentially Osmosis is planning to encrypt the content of the mempool to prevent front running. No single validator will have access to the ordering of transactions or information, and there will be, essentially you will need consensus amongst validators to actually submit certain transactions, which will prevent front running. And in combination with block building services, this will lead to closed bid auctions, again, higher gas fees to validators. All right, so most importantly, why should you care? So I think there's sort of two people in the room that I'd like to address, and that is builders and investors. So the responsibility of builders. As builders on Solana and Cosmos, you can actually influence the way in which your users experience MEV. You actually may yourselves have access to privileged data, which is inherently valuable, and I think you probably need to ask yourself, how will you use this data? Apologies. So how are you going to use this data? You know, will you sell it to people who want to make use of that? Will you use it yourself to generate profits? If you do generate profits, will you redistribute it to the community? These are all things to think about, and I'll kind of leave that for you to decide. But I think it's important as well to choose a research or validator partner that understands MEV well enough to help you navigate the nuanced landscape. We've kind of seen that this is a pretty complex topic, and I've gone through this as quick as possible as this presentation slot will allow, but there is certainly a lot more areas to dive into, but hopefully you've got a flavor as to how MEV differs across different networks and how complicated it can actually be. It might be good to kind of partner with somebody who understands this in a lot of detail. And finally, if the clicker will work, investors. So you should be aware of MEV to better inform investment decisions. So you should be aware of the unique features that influence the MEV landscapes across each of these networks and the potential impact this could have on tokens. We looked at osmosis as an example, and we can really see that there is a big MEV market potentially on Cosmos, and if Osmo is the primary token that could drive that, then this could influence your investment decisions around a token such as osmosis. You should be aware that the value that you should be aware of the value, that you could capture by gaining exposure to MEV opportunities. So Ethereum, we haven't really spoke about Ethereum in this presentation. There's not a whole lot of time, but Chorus One, we've kind of been one of the earliest participants in proof of stake Ethereum via Lido, and we can use Ethereum as an example. 218 million arbitrage gross profit in 1 year, and the biggest transaction ever generated 3.1 million. From arbitrage. So there's a real big opportunity here, and Ethereum is the most mature blockchain in terms of coverage and profit around MEV, but this reflects really what is possible amongst younger blockchains like Solana and Cosmos. This is where we think they're going to go in these kind of directions. So again, if you're an investor and you want to kind of capture some of this value, you should really be partnering with a validator or research team who understands what's going on here to again help you kind of navigate how best to do that. And if anybody does, in fact, before I go, I will say that this presentation does include a section on Ethereum, not here, but it's going to be pre-recorded. And if anybody wants to see what's going on in Ethereum in conjunction with Solana and Cosmos and wants access to that presentation, just come and grab me after this presentation. We can, I'll share it with you somehow. But for now, thank you very much for listening.
Thank you, Alex.